Everybody can see my screen, right?
Yes, we can.
Yes, sir.
All right,
Yes, sir.
all right. Okay, I believe you should know that changing to time frame starts from your daily. And I've showed us how to do that. You see, I can click 1 hour, and the 1 hour daily, sorry, that's where you go through. You go to straight, and then I believe you know how to go to your time frame. Madam Naomi, please, can you hear me?
Yes, sir.
All right. When you go to the one daily, the next time frame that we have been teaching all across is that you go to 1 hour. But you're not limited to staying at 1 hour. You can go to 4 hours and the rest. But throughout my classes, I deliberately and intentionally stick to daily and 1 hour. And for 1 hour, periodically, I step down to 15 minutes. So what I said several times that the first point of call, according to our trading protocol, is to go to daily first, map out the key levels. And I said the key levels are previous day high, previous day low, and then a day before yesterday, just as I'm doing now, I picked the line here. I showed us how to pick the line, how to pick the horizontal line to set our support and resistance. And then our previous day resistance, according to what I'm doing now, is the next candle. And I said, you duplicate this. I have showed us how to duplicate that. And then you go to day before yesterday. I give it a dotted line to separate the two places. So I believe you should know how to do that by now. So I am doing this just to give you an idea why you go to the previous day low and high by separating it, giving differences. The difference between the support and resistance of the day before yesterday is shown by the tick line. So you see that the dotted line is for day before yesterday, while the tick line is for yesterday. Then you click here, and then you click on the screen again, and then you go on 1 hour. Now 1 hour helps you to see what the candles are doing at a lower time frame. Our aim is to catch the quicker and faster money. We don't want to spend the whole day sitting on our screen. That's why we go on 1 hour. With the hope that within 15 minutes or less, you can catch something. So the 1 hour also is a high time that tells you what the market is doing. So what we do is daily to 1 hour and then to 5 minutes or 15 minutes. What I'll be teaching us today is time frame alignment. Time frame alignment. I don't know whether I have answered your question or there's something I have not. You still feel I've not answered your question. That's if I really got your question very well. Okay. Please, any other question?
Good evening, sir. Good evening, sir.
Hello. Good evening. Good evening.
Hello,
Please.
can you hear me? Good evening, sir. Okay.
I can hear
Thank
you.
you for sacrifice you are making for us. Please,
Can
I
you hear
have
me?
one question. I can hear you very clearly, sir.
Please, sorry. Can you introduce yourself? Who am I
Okay, my name is
talking? Who is
Olesen.
talking?
Olesen. Hello, can you hear me?
Hello. Your network is shaking. I can't hear your voice is shaking. I can't hear you, please.
Thank you,
Can you hear
sir.
me?
Yes, I can hear you clearly, sir.
Okay. I
Hello,
couldn't hear what you said. I can hear
okay,
you.
I said my name is Oles. My name is Olesen.
All right. All right. You're welcome, Olesen.
Okay. Please, I wanted to ask, I have a question. When will pick a trade. Let's say we've already done all the time alignments on day one, then 1 hour. If we are sure of the trade, can we pick the trade on 1 hour, then go on a lower one, maybe 5 minutes or 15 minutes, then set our stop loss and take profits?
You step down to 1 hour, and then from 1 hour you step down to 5 minutes. Now, if your entry is in 5 minutes, that means your take profit shouldn't take you very long. Now, if you analyze on daily and then you filter down to 1 hour, you can enter at 1 hour or 5 minutes. Now, if you are working on weekly demands that your time alignment should be 4 hours. This is 1 hour. Your time alignment, are you guys seeing what I'm writing?
Yes, sir.
All right, it's 4 hours. This is your time alignment. And then your execution, your entry is supposed to be 15 minutes. Now, if you're actually working on 4 hours, which are the 3 major high time frames, now that means that the analysis, you filter your strategy to confirm what you're seeing on the high time frame on 15 minutes. Now, if you're doing that on 15 minutes, that means that you're coming down to 1 minute, to 5 minutes, to 1 minute, actually, 1 minute. So your entry will be on 1 minute. So if you are doing 1 minute, you know that here your concentration will be on counting candles. You'll be concentrating on counting candles. And I told us that you can count candles by up to 10 or 5 or 6 and come out. But a person on 15 minutes is talking about counting candles. He's talking about target. His target is, if I enter here, what is the next range of candles? You're talking about range of candles. And the range of candles can show you the next support and resistance. The same thing on 5 minutes. But I also said you can come out of your trade based on your goal. What is your goal? An account of $100. My goal is to make maybe, let's say I have $100. My goal is to make maybe 5% of that account every day. So 5% of this amount, 5% of $100 is what? $5. If my account is $20, is let's say $20, and then my goal is, I said 5%. $5 of $20 is what, please? All right.
Yes, sir. Hey.
Okay, all right.
Well, I can hear you.
So-
I can hear you.
Okay, So, but if you are take profit, right, it's telling you that you can make up to 10%, or is heading towards even 50% profit. You won't say you won't collect it. No, that is not what I'm saying. What you should be doing is that, let me clear this screen. I'm doing this so that you understand what I'm saying. You entered from this point at the key level. that the market will go up, down, and then maybe at this point is your take profit. And then, you know, market is not a straight line. It will go like down and then before going to hit your take profit. Now, at this point, maybe this take profit we are seeing could give you 50% profit of your $20. 20% of to give you 20% of your $20. You will say no. Meanwhile, you enter from a key level. At this point, you have hit your initial goal of 2%. Meanwhile, when you entered here at the key level, your stop loss was here. This point is your stop loss. This point is your take profit. This point here is your take profit. And at this point, you have hit 2%. I'm not saying you should jump out, except the market is looking funny. The market went all the way to this point, came down, threatened as if it's going to hit you. What you are supposed to do, move your stop loss. What do you usually say? Break even. Move your stop loss to this point. And allow the market at this point, if you have moved your stop loss to this point, you are trading at no risk. That means that there's no risk with this trade. With what it means that if the market decided to come back to hit your stop loss, you are not losing. You have made actually 2% of your profit. If the market keeps on going, you have made 50%, fine. But there are situations when the market will even give you 100%. And then there are situations the market will even come below the 2%. Always observe what is happening in the market. What you should do is to make sure that you don't lose. But there are situations from your key level, the market didn't even hit 2%. Well, if you hit your stop loss, just make sure that you are not losing more than 1% of your account. Of your $20, make sure that you don't lose more than 3%. If you have big accounts, some people say don't lose more than 2% per trade. That means that they expect you to enter maybe maximum. If okay, let me give us this. What I'm sharing to us is very key. You have $100. Don't think that this analysis I'm doing is nonsense. Split this $100 into 10. Let me make it this way. And out of this 10, that means that if you lose 10 trade, you have blown the account. Meaning that for each trade, you are risking $10. No matter how good you are, if you don't understand what I'm teaching you now, I'm telling you, you are just wasting your time. You're just wasting your time. If you don't master what I'm showing you now, $10 is what you are risking per trade. You're risking $10 per trade. What it means is that you are losing how much? 10% of your account. Now, what you should do per day, not per trade. Let me say, you decide to say, okay, I have $10 to lose. And out of 10 trades, we are supposing that per trade, you are targeting 1 to 2 risk reward, RR, what they call RR, risk to reward. Meaning that for each of your $10, you want to make $20. For each of your $10, you want to make $20. That's what 1 to 2 means. we're making a profit of $20. Some people even target $30. Some people even target $6, like 60%, 60 of the amount they are risking, not of their entire money, not of this $100. Of this $10, you are risking of this $10. We are targeting this amount. We are targeting this amount. We are targeting this amount. So it's depending on you and what you see in the market. And at times, not that it's in a single trade you are targeting this, but it's expected that per trade, 1 to 2 reward, you can make $30. You can make 50% of your account of this $100 in 10 trades or 2 or 4 trades you have entered. So imagine you entered 5 times. You enter 5 times, and each of those 5 times you are making $20. And how much are you risking? $10 per trade. We're making this example assuming you have $100. So imagine you have, because we say the airlines group, we're expecting that the minimum we should start with is nothing less than $50. It's for very good risk opportunity. And so if you are starting with $50, so you divide the 50 by 10. Any amount you are starting with, divide it by 10. So that means that you have $5 to risk by trade. Please, is what I'm saying, is it making any sense is it making any sense to us, please?
Yes,
Yes, sir.
Very much.
So we are reaching $5 per trade if you have $50. So if you have $100, you are risking $10 per trade. And then we're saying per trade, your target, your goal is to make twice any amount you are risking, twice of your risk. So if out of the 5 trades you decide to say, I will trade 5 trades a day, which is not right. You could say 5 trades in a week. You can say 2 trades in a day. So let's say you decided to enter 5 times, and each of them you were getting 100%. You are achieving your 100% goal of this. You are achieving 100% success, right? 100%, and then you enter 5 times in a day. Out of that 5 times, you make $20 per trade. How much have you made? You have doubled your $100. That means you have made $100 in a day. Let's say you enter 5 times and you lose 3 trades. Lost. You had 3 lost. That means 3 stop loss were hit. Right? And then you have 2 take profit. That means that you have lost $30 from this trade, while you gain, how much have we gained? $40. Now, let's assume that you are allowing your take profit to hit. Now, you would have thought that I lost 3 trades, but you want 2. This is the advantage of ensuring that you allow your trades to run. Now, the person that is entering and setting his take profit on 1 hour, and the person that is doing his own on 15 minutes, we all agree that their take profit and stop loss is not the same. I showed us an example of that one. Your stop loss for 1 hour is not the same as the stop loss for person on 15 minutes. Now, what do I mean by that? Yes, the person on 15 minutes can set his stop loss to be the same with 1 hour. Yes, you can set the same. But the person on 15 minutes just know that your stop loss will be very large. Assuming you have $20, your stop loss that a 1 hour set could be close to $40 or maybe $20. So imagine you are putting a stop loss where a 1 hour person is putting a stop loss. That means you are risking $20. That means you are risking 100% of your money. That's a very poor money management. So that's why you step down to 15 minutes or 5 minutes while you have done your analysis on 1 hour to find a reflection of what you see on 1 hour. If on 1 hour I saw this candle, I saw our engulfing, what is this? I saw our engulfing, let me draw this engulfing pattern, right? We saw our bearish engulfing pattern like this. And this is our bullish engulfing pattern. This is our bearish candle, and this our bullish candle. So this is my key level, this point. And let's say the whole of this thing sits on previous day. This is previous day. This previous day support. What I should do is to wait for price to retrace back to this point at this key level and enter. And then when we enter from this key level, I expect that the market, it might bounce here, but I am sure that it don't hit my stop loss here. Here is my stop loss. And let's say this is how it goes. And at this point, I have this engulfing pattern, which is my key level. And then I'm supposed to take my take profit here. And then take profit is probably previous day high. And then maybe somewhere here was the previous day low. So, and then you decided to put your stop loss here. Now, let's say this is 1 hour chart. 15 minutes. This stop loss here, if I put my key level here, my stop loss to this point could be even up to $20 or maybe $40. Right? Let's say $40. On 15 minutes, I try to find something similar, key level. I've tried to find a key level that allows me to set my stop loss, that shows me engulfing pattern, that shows me similar thing like this. That shows me similar thing that I can set my stop loss. At least even if it is not below the resistance, but the range of candles can show me that this key level is replicating this support. This key level on 1 hour can become my support on 15 minutes. So when the candle retrace and begin to go back, I put my stop loss here. While the person on 1 hour put his stop loss here, he is more secured. Yes, he's more secured than the person on 15 minutes. That means if you are entering late, but you have to wait for market to retrace back to this point for you on 15 minutes to be safe. So when you retrace and return back and the candle, and the candle retrace on 1 hour, this 1 hour, retrace back to the key level after going up like this and return back to the key level. This is our KL, our key level. You that has 15 minutes, you have to wait for price to break. This key level is support. Always see that it's support on 15 minutes on lower time frame. Wait for it to return back and return bullish. When you return bullish, you step down to your 15 minutes. Your 15 minutes, find an entry. Just on 15 minutes, you will see that key level on 1 hour as your support. Set your stop loss here. You find that you will put in a lower stop loss and then allow the market to run. Now, as I told us, you can still wait to hit the same take profit that the person on 1 hour. Our issue is about the risk. You can wait on 15 minutes. After you have entered, you can switch back to 1 hour and watch for the market to go up. But because you have just small amount of money, you can't wait. You want to grow your account quick. Please target that your 2% goal. Shift your stop loss. This is your stop loss. Shift your stop loss upward to H and block your 2% profit. Even if the market returns back. Why do you do that? Because the person on 1 hour has a more safer level of stop loss, which is below the previous day low. Whatever I'm showing on previous day low, in case of your buying, also applies if you are selling. Please, I don't know whether I'm making sense, because this is the level we'll be entering on the Elite group. I will go in detail into money management very, very well. With other strategies, I have not spoken. I told us I was not going to spend time because I only have 14 minutes left for this class. Please, I don't know if I am making any sense. So what I'm doing is tautology.
Yes, sir.
I need somebody to answer me.
You are making sense, sir. Thank you.
All right. So because some of us have been blowing account, I have on pain and gain. I'm giving us the secret why that is happening. Pain and gain. Because you don't set goal, one, you don't risk based on your account balance. And you go to take assets. You are taking assets that can blow your small money. Now, the person that is on FlipX is safer than person that is trading on gain X and pain X. I am not teaching anything new today, because what do I want to teach again is already in the video. It's already in the video. We'll be running review. Yes, we'll play straight review just the way I did the other day, which the video is available, because we'll be going into cryptocurrency and Forex. So we won't limit our distance to just synthetic. So if you have a small account, in fact, I can show us on my account. How many of you remember that I started trading an account of $1? How many of us remember? How many of us saw I was trading on $1?
Yes, I've seen it. Yes.
All right. If I told us that our account now is $4, will you believe me? Are you seeing my screen?
Can see your screen.
Yes.
I can't see it. So.
I can't see it. I cannot see it.
No, the way I'm doing drawing, not my account. The drawing,
Yes,
the drawing,
I'm
the
seeing
pain.
whiteboard.
Okay, I'm seeing the drawing.
You're seeing that one. Okay. All right. Let me show you. Let me show you people.
Thank you.
Let me show you people that particular account. Just a moment. To confirm that I'm not just making noise. I am actually what I'm teaching is what I'm showing you is. Can you see the account? How much do you see the account now?
4.9. 4.91.
Yes. So how do I raise it? I cannot raise this account of money using pain and X. pain gain X and pain and gain. There is a reason why they gave it name pain. It's actually causing pain.
Exactly. Oh, you don't kill me. You don't kill me.
My brother say yes.
You don't kill me. You don't kill me. I'm telling you.
Exactly, sir. It paid.
Ben Hakim.
The reason why they didn't call it, they didn't. That's caused a lot of problem. It's not just a joke. So it's not.
No, I go show you. Bro.
Please mute yourself.
I trade today, although na synthetic, no be real. A demo account, but I make money today. Oh. I make money today.
You trade demo account, you're gonna tell us, and you're not gonna share the money with us. Hello? Somebody is saying
I beg if you are doing a demo,
you're supposed to start trading life so that you share the money with us. So please mute yourself. If you don't want us to know that you make money, if you make and you put it on here, you have to share with us. So that's on the lighter note. I'm happy for you. That's encouraging. That some of us are making money. So are we seeing my whiteboard?
Yes, sir.
Are we seeing my whiteboard, please?
Yes, sir. Yes, sir.
Yes.
Somebody
yes,
should please reply back. I need to know if you are listening.
Yes, sir. Very well.
Yes, sir.
Yes,
Yes,
sir. We are listening.
All right. So what I'm saying that I use FlipX to carry $1.3 to $4.9. So you can see that I was able to double my account with low risk. With low risk. I place this trade and go to sleep. In this trade, I can risk 20 cents. I can risk 20 cents. I can risk 10 cents by using a 0.1 lot size, 0.01 lot size. I do know that, do you people know who will help me know about FlipX 0.01? She's here. She's one of my students here, and surprisingly, I know she's hearing it. It's Naomi Arutola. She's one who told me, sir, do you know you can actually trade 0.01 on FlipX? I said, are you serious? She said, yes. I said, the place we are all both learning synthetic. They told us that it is only gain and pain we should trade. It's like if we trade flip or anything outside that, something will bite us from the platform or something will swallow us or will be flogged. Don't even dare it. If you try it, it's like your phone will disappear or something. Or fire will fall on your head. Sorry, it's on a lighter note. I like putting some funny things when I'm talking. So I decided to jump in, and lo and behold, I found out that she's right. I can actually trade lower risks because I told her, let me go back to my forest and stick to my forest. So it was when you spoke, I started doing research and development, my R&D, and then begin to see that, wow, this is good. So what are the assets you can trade here? We can trade FlipX, we can trade FX volume with lower risk than going to blow when you have just small amount of money, less than $20. Let me tell you, if you are trading pain and gain without being in the classes, except you are using the strategy I showed you, that we have the videos already, you can trade pain and gain comfortably. But I am putting a but. Know that if you are trading pain and gain, trading with lower than $100 or $200, you are putting yourself on a high jump. Every strategy any trader can always show you as best that can make you good money can at best be 85 to 95 to 90% accurate. No trading strategy is 100%. In fact, I doubt if it's even up to 95%. No, only God is 100%. 95%, even if you are winning 10 of your trade, does not mean that your strategy is 90% or 95% accurate. If out of 10 trades, you can win 5, I think you should count yourself among the 5 successful traders out of 100. Hello?
Hi, sir.
Are we
Oh, yes,
together?
sir.
Yes, sir.
Yes. Yes, we can hear you.
Yes. In fact, if
We're
you
together.
lose 6, which is not right, and then win 4, and then you're targeting 1 to 2, right? So you calculate 4 times. Let's say you are making $20 per trade, per $20. That means you have made how much? $80. You have made $80. Why you lost $60? That means that you still made a profit of $20. So on $100, that means you have made 20% of your account. This is strategy. It's not about strategy. It's all about I am winning. No, you have to organize yourself. That I have $20 times 10. I'm willing to risk only per trade. What percentage do we say? You're only risking $2 per trade, or per day, or per number of trades you are taking. If you want to take just one trade, that means that you are only risking $2 per day. Giving yourself that you want to trade for the next 10 days. That means if you are trading for the next 10 days, you are risking $2 per day. But if you want to trade, maybe let's say two trades per day, that means that you are trading, you are giving yourself that I'm giving myself 20 days. That means that if you are taking 2 trades per day, not 1 trade per day, not 1 trade per day, 2 trades per day, that means you are risking $1 per trade. That's what it means. So if you are risking $1 per day, I want you to, is it pain or gain? That can allow you risk $1? I want you to answer. How will you use pain and X to achieve $1 loss or risk per trade? Can somebody explain to me? If you have been following my class, you will answer this question. How do you use pain and gain to achieve it? Can somebody answer, please? Who can answer this question? How do you use pain and gain to risk just $1 per trade? Well, I don't have time. Since we are quiet, let me just answer for the sake of those that don't have time, including myself. Pain, we say, always spike downward. While gain, pain spike downwards, while gain spike upward. Now, that means that if gain spikes downward, the candle is always going up. While if gain spikes downward, if you get spike upward, that means that the candle, right? What does it do? It's always spiking, it's always counting downward. While pain counts upward and then spikes downward. So what it means is that if you want to reach just $1 in any of these synthetics, don't trade against the spike. Rather, trade with the spike. So on gain, I can say I'm risking, you can even say you are risking 50 cents or $1. Then here, you can see risk the same thing. But if you are counting candles and a spike happen, just this spike can be equivalent to $10. That means that you have lost 50% of your account if you are starting with $20. Just one spike can take up to 10 amount, can take up to $4, can even take $3. So on an account of $20, how much have you risked? Just in one single trade. Poor money management. You have risked more than what you are supposed to handle. So if you have little amount of money, don't trade against the spike. Look for analysis in such a way that if you pick a trade, you can say, I'm putting a stop loss. Here, I can put a stop loss. In case I'm putting a stop loss, so that the stop loss, because spike does not even respect stop loss. So that if this candle begin to, if I put a stop loss here, what this means that if the candle, right? If the candle begins to count, it begins to count, it's count. I'm expecting a spike down. I'll put my stop loss here. I'll put my stop loss. I'm expecting a spike here. If the spike did not happen and it went up, so I can only risk small amount of money. If the candle keeps counting against me, I'm just risking small amount based on the number, maybe 2 or 3 candles. If after 2 or 3 candles it does not spike, I've just risked maybe $1, no problem. But the person that has big money, he can say, I'm putting a stop loss of $10. He knows that within $3 or $4 or $5, the market would have spiked. And just this spike, imagine this, just one spike is giving the equivalent of what you should have lost in profit. I'm showing us how to trade. We have been trading these two with a very poor money management strategy. Today, I'm just talking about money management. I didn't go to, I wanted us to go to the chart. But what I'm showing us is the secret. All I've been teaching us without this is equals to 0. Equals to 0 without good money management, MM. I've been showing us, this is why we have been losing our account in pain and gain. If you have listened to me very well, you understand that if you have small amount of money, follow what we have been teaching over the days and the week, and only hunt for spikes. Only hunt for spikes. If you have small amount of money or big money to trade safe, to hunt for spike, that means that you look for the daily structure that allows you, that has lower spike, that has high spikes. If you have small money, if you have small money, look for, if you have big money, fine, like $50 or $100, you can afford to play with this counting of candles. If you know that today there will be less spike, fine, then you can go for counting of candles. You can go for counting of candles, whether upward or downward counting of candles. If that day has less spikes, I've shown us how to know the day that has less spikes, then you are safe. But if that day has high spikes, just don't even think of trading against the spike. Look for the spike. That day, you'll be having low risk. it's a day of low risk. If there will be, if it's a spiking day, it's a low risk day, meaning that only look for opportunity that spikes and don't put too tight stop loss. Let your stop loss be, yes, within range, $1. If you miss it, fine. Use our analysis and find a very good support and resistance. And on this 1 minute pain X and 1 minute pain X, you cannot really see a golden pattern now. You cannot see a golden pattern. That's why we used our 1 hour, 30 minutes, 4 hours, so that we know key levels. The moment we have gotten key levels on 1 hour, we cannot drop to 1 minute and then apply what I've just been teaching us. Please, any question? I think I've done more justice to this. As usual, I always say we should always go to and watch. Any question based on what I've been talking, please? This is what I wanted to show us today, and it happens that I spoke about what is more important. It's like the Holy Spirit guided me to talk about what we need to know based on the question. Very good question someone asked, and that question has taken all the time, and which is a very good question. Without that question, honestly, I wouldn't have taken time to speak about these things. What I've just spoken today are things that I reserved for the Elite group, because in the Elite group, it's going to be intensive, because our aim is that we will replicate my type here and then make money and raise money, and then you also can empower people, and the rest only God can lay in your heart to do. Any question, please? Because I just want to show us this for 5 minutes and the class is over. Any question, please?
Is this recorded, sir?
Yes, it's recorded. I know some of us are just hearing this, even advanced high traders are just hearing this. Some even good, I call it some good who don't even know what I just shared to you. It's not about having the best winning strategy. It's having a very good, organized, systematic money management. You don't just risk arbitrarily. You don't just go to the market because you have 1 million naira in your account and you just go and buy everything. You budget. I have 1 million naira. Go to the market, I'm spending 50,000 naira. And I'm splitting the 50,000 into this and this. This is the with trading. You have $20. You come to the market, okay, I'm risking $10, I'm risking $5, I'm risking $2. And it's not expected that you should be risking more than 3 or maximum 5%